Yo, the man in charge of America's sovereign wealth fund, Howard Lutnick, gave a bombshell interview yesterday explaining why Bitcoin is just a commodity. But it's not just a U.S. Secretary of Commerce obsessed with the idea of becoming digital gold. Bitwise CEO recently said that Bitcoin could reach parity with gold before 2030. That'd be roughly $1 million Bitcoin. And that he believes that institutions have broken the 4-year cycle. That's a $20 trillion market cap and implies, again, a $900,000 Bitcoin. So today we're going to be explaining all of this and more. And of course, we have a very special guest joining us. We have co-founder of Lenin and a friend, Mauricio, joining us on the show today. And of course, my legendary co-host, who's always optimistic, the one and the only Optimus Fields. Anyways, here is a clip from the Howard Lutnick interview. I believe Bitcoin Magazine did it. It was at the White House. I highly recommend you check it out. But check out this clip. It's really interesting, and we're going to talk about it.
You know, I believe, like the way you talk about it, is what is Bitcoin like? It's like gold. To me, it's a commodity. Why? There's only so much of it, right? And it's like gold. Now, gold trades anywhere. No one stops me from buying this ring when I went to buy the ring of gold, right? So gold trades everywhere. Exchanges, okay. If you want to be an exchange, you can be an exchange. But if you want to buy and sell gold, you can buy and sell gold.
Right.
So I think you should be able to buy and sell Bitcoin. It's a commodity. It should be treated like a commodity. It should be treated like oil. It should be treated like gold. It's intellectually correct. I know people have all sorts of things to say about it, but in the end, it's not a currency, it's a commodity. And once you embrace the concept of a commodity, you'll see how beautiful that is and how that fits into almost every thoughtful box, right? No one stops someone from selling oil from one person to another. No one should stop someone from selling Bitcoin from one person to another, using Bitcoin, however they want to do it. You want to put it on an exchange? Fine, call it a commodity exchange. But let's understand that Bitcoin, if it's treated like a commodity, is the freedom that we all.
I mean, kind of interesting. And I heard, I think, him talking about this on an interview that he did with Anthony Pompliano, right? So from a bullish perspective, we'll talk about price. We'll play you guys the clip from the CIO from Bitwise about how he believes that Bitcoin is going to reach the market cap of gold. That would roughly equate to $900,000 to $1 million Bitcoin. And then, of course, you have someone who's part of, the current administration's cabinet, basically equating Bitcoin to gold, calling Bitcoin a commodity. However, I think the way he's framing that is on purpose, because I think that if he called it money, I think from a regulatory perspective, Bitcoin would be treated differently. But as long as Bitcoin is a commodity, he said it himself. Like, he's openly saying there's more freedom involved. Like, people could just send it to exchange and you can do this with it and you can do that with it. I think he's doing that on purpose. And he would, before he was Treasury Secretary, he went on Palm's podcast and he's like, look, as long as Bitcoin's a commodity, it's not a problem. As long as you don't call it money. Now, of course, Bitcoiners feel a certain way about this because, we see Bitcoin as money. I think Bitcoin is whatever you want it to be frank with you. I think people use it for many different reasons: savings, money, commodity, right? Bitcoin is, and it is whatever you want it to be for your personal situation. But I did find that very, very interesting that, he's kind of taking this stance where he's hardlining and he's saying that Bitcoin is not money. Mauricio, how do you feel about that? I mean, this is clearly a strategy. It's very wise. I think it's not to stir the hornet's nest, but obviously as Bitcoiners, we feel a certain way about Bitcoin being money and a commodity. What are your thoughts?
Great. Thanks, Nico. And I think, people tend to get somewhat, I think people overthink this idea, because I think, to your point, Bitcoin is what you want it to be for yourself. Like, Bitcoin means different things for different people, right? Like, some people might use it as money. Some people might use it as their reserve asset. Some people might use it as their investment fund. There's many ways that you can use Bitcoin because it can do so many things, right? If you are if you are the Secretary of Commerce of the United States or any part of the United States government, it's not in your best interest to basically portray this as money that would potentially compete with the US dollar, right? Like you're looking at this as a complement to your existing financial system, your existing financial stack. How can you use Bitcoin to basically further your interests or further your own agenda? And if you are the United States, where you want to be, you're entering into this sort of pro-technology, pro-Bitcoin era, you don't necessarily want to reintroduce it into the main sort of mainstream as something that is competing with the product that you so cherish and value, which is the US dollar, is the backbone of the US economy and frankly the global economy. So I think, to your point, this is deliberate. To me, I've always thought that governments will treat it as a commodity, as they should treat it as a commodity. And I think this is actually great for Bitcoin, because at the stage at which we are right now, where it has to coexist with the fiat system, this is par for the course. This is exactly how it's supposed to go. And by the way, I will argue that as long as fiat exists, you will be better off spending that fiat and keeping that Bitcoin. That in many ways is the genesis of our business. Our business, Lenin, is based on the premise that Bitcoin and fiat will coexist for the foreseeable future. Therefore, you will benefit from borrowing fiat and keeping your Bitcoin. So people have different views. People will try to express those views in the market by investing certain things or building certain products that kind of further that idea. But if you rewind 2-4 years, even 5 years back, the companies that have taken the view that Bitcoin will be a reserve asset, so i.e. MicroStrategy, i.e. Companies that facilitate loans to let you keep the Bitcoin, like Ledin, i.e. companies that do cold storage or multisig, those companies have benefited greatly. Whereas if you look at the companies that have tried to sort of drive this concept of spending your Bitcoin and using your Bitcoin as money, you're having more headwinds, because who wants to spend something that's appreciating at 40 to 60% year over year? You would be a lunatic to spend that over something that depreciates in value over time. So this is why companies, like for example for us, and I think it was Preston who coined this, but he called Ledin the speculative attack company, in that it lets you hold your Bitcoin, get a loan on dollars, and basically go short dollars while you're still long Bitcoin. And we have done phenomenally well over the last little bit. Even we've had a record-breaking Q1. We can get into that later. But again, it goes back to this idea that spend bad money, hoard good money. And if that money is deemed a commodity, whatever you want to name that thing, is kind of irrelevant to me. If it's appreciating and you can hold it, great. And if you can spend something that's depreciating, do that, right? So to me, it's par for the course. It feeds this idea that Bitcoin is an asset. So a commodity is something that you want to store, you want to hoard. That's okay to accumulate. Why would you want to accumulate fiat if it's getting debased every year? There would be no sense. It makes no sense for you to do that. Hoard gold, hoard oil, hoard all the things that are priced in fiat. Beautiful.
Yeah, it's an incredible point. And Mauricio, you're noticing what we're noticing, which is like, obviously it's not in the best interest of a member of the US government to basically say, hey, Bitcoin is the money, because that would potentially compete with the US dollar. But you're also making the case that, look, here's the reality, because I think Bitcoiners had this perception. And this was before essentially the massive, guys, you have to be honest here. Like, the stable coin adoption worldwide is unheard of. Like, no one expected that. And where it essentially came from was a market necessity. Like, if you lived in a country that had an unstable fiat currency, the dollar to you is essentially the equivalent of holding a gold bar, right? And you didn't want to deal with the daily volatility that came with Bitcoin, because most people around the world are living paycheck to paycheck, right? So I agree with you, Mauricio, that at least for the foreseeable future, I think we're going to live in a world where Bitcoin is whatever you want it to be. That's the beauty of Bitcoin. And simultaneously, what's going to be existing next to it is going to be the dollar. And I think that's going to be the case at least for the next 10, 15, 20 years. However, you can use that to your advantage, which is what you were pointing out. And there's a lot of like companies like Ledin, for example, that essentially allow you to tap into the wealth of your Bitcoin without having to sell your Bitcoin. So we're going to talk about that more during the show. And yeah, man, so that's a very, very great way of looking at it. I love how you pointed that out. But yes, it was very obvious. It was obvious that he was trying to frame it as, this is not money, this is a commodity. And he had to say it like 3 or 4 times.
Would you want to have by the way, we have to go through the rest of the interview, which is this concierge service for miners. But like, how wild would it be for you to say that you're going to have a white glove service for something that comes and mines money in your country and just can keep it? Like, it makes no sense, right? So if you call it money, it breaks the mold of a lot of the things that you're trying to do. And it goes against, again, the general idea. Like, Bitcoin already is hard enough to explain to somebody when you are not telling them about how it's competing with the US dollar. If you start introducing this idea that somehow it's going to compete with the US dollar and may risk the greatest product the US has ever built and shipped, then people are going to start questioning it. And I would say it's going to delay adoption. I think this is a very natural step in the evolution of governments adopting Bitcoin. And there's a reason why the Trojan horse is such an important icon in Bitcoin culture, which is Bitcoin comes in, you deem Bitcoin to be what is in your best interest. So if it's your best interest to deem it as a commodity, you'll deem it a commodity. If it's in your best interest to deem it as security, you'll say it's security. If it's in best interest to deem it it's money, you'll deem it as money. But at the end of the day, it's your that's your opinion. Bitcoin is, that's it. It doesn't exist as a uniform, thing, right? Like, to some people, again, they use it as money. Some people use it as a reserve asset. Some people use it as something else. So I just think that this is a very natural step. This goes, again, furthers the idea that you hold Bitcoin, it goes up over time. Why spend it? Then, eventually somebody will say, well, you know what? I don't want the fiat. I'll only settle this deal if you pay me in Bitcoin. Then we move into using it to settle for transactions and other things.
Absolutely. I also have a clip of the Bitwise CEO. He's predicting that Bitcoin is going to flip the market cap of gold. That's not simply Bitcoin saying that. That's the CIO of Bitwise. Let's check out the clip, and then we'll talk about it.
We elected a pro-crypto administration in the U.S. We've established a Bitcoin strategic reserve. I think you're going to see governments around the world buying Bitcoin. I think you're going to see institutions buying Bitcoin and corporations buying Bitcoin. And if Bitcoin becomes an asset that's held by governments, by corporations, by institutions, I see no reason why it won't meet parity with gold within the next 4 years. I sort of think we're in this new 4-year, multi-year cycle of government and institutional adoption. And I think
So, he's predicting that's going to happen within the next 4 years or so, that Bitcoin reaches the parity of gold. That's $900,000 per coin in the next 4 years. Roughly a 9x. I think it's a little bit ambitious, but if you connect the dots with all of the news that's been happening, I've been saying this for the last 6 months. This has been by far the most bullish Bitcoin cycle from a news perspective I've ever been in. I think this is my 3rd cycle. I've never seen this amount of bullish news. With, of course, the election of Trump, you have a pro-Bitcoin administration. You have institutions all around the world basically, opening their and saying, hey, you know what? This Bitcoin thing, it's probably a good idea. You have the success of MicroStrategy. It's like it's left and right. There's just bullish news. And what we're going to talk about during the numbers also is the massive increase of essentially the lending market in digital assets, which is extremely exciting. And we're going to be talking about this too, guys, because this is a great way also to tap into your Bitcoin without selling it. Of course, you have to do this responsibly. But I see more and more Bitcoiners finding themselves in this conundrum where, they've hodled for a long time and they don't want to get rid of the hodl, but you know, they want to start living a little bit because perhaps their wife is like, hey, you know what? We've been hodling for a decade and we still don't have a house, you know? So, you know, there's ways to do that. There's tools to do that. So we're going to be talking about that. But Mauricio, what is your take, man? Do you think it's overly optimistic? I'm borrowing Opti's title. Is it overly optimistic that Bitcoin reaches the market cap of gold within the next 4 years?
I think to me, it's not so much will it do it. I think it's more what's the time frame is going to be. If you look at actually one of my predictions for this year, which I do mostly for fun, I put in that Bitcoin was going to reach 40 ounces of gold per Bitcoin, and I think the increase of ounces of gold per Bitcoin will continue until, to your point, Bitcoin gets closer and closer to the market cap of gold. Gold is at, I think, $12 trillion or $11 trillion. Last time I checked, Bitcoin somewhere in 2. And so there's still ways to go. But I think if you look at, you know, who's holding the gold and why are they holding the gold? They're holding gold because it's a dead rock that basically just preserves its value culturally. That's what it's done for hundreds and hundreds of years. And I think as the meme of Bitcoin as a reserve asset grows and grows, and you compare it against what you can do with Bitcoin versus what you can do with gold, it's easier to send, it's easier to move, it's easier to store, it's easier to verify. It can be, you know, you can use it to access products globally. You don't need to, you know, secure an army to ship it halfway across the world. You can transfer it for pennies. So it's a superior reserve asset. It's akin to sending a letter via mail or email, right? So eventually email wins. How long does it take for email to win? Well, it depends on adoption. It depends on how quickly we can get the infrastructure laid out, but it is a better technology. It's a better asset. It's easier for people to verify. I would argue it's a lot more inclusive. So I think it does get to parity with gold eventually, whether it's in 4 years or 10 or 15, you know, I can't really put a pin on that. But for me, that's why I'm here, right? Like, I think it's better. It's a better reserve asset, and it's more globally accessible, and it's easier for everybody to have. So why would it not become a more valuable thing? So yes, it will get to parity in my view. Timeline, TBD. I think 4 years perhaps is a little bit ambitious, frankly, but it'll get there for sure.
Absolutely. I think it's going to get there, and it's an inevitability of when it will get there. I think it's just a question of how long it's an inevitability that it will get there, but it's a question of how long will it take? When? I think, 4 years. Someone in the chat, Opti's Consigliere says, when gold is demonetized for Bitcoin, I'm going to dress like Mr. T. Yeah, I mean, there will be signs. There will be signs of Bitcoiners that have held for a long time. But you need to keep on. You need to hold on to your Bitcoin. You need to make it over the finish line. Hodling is not easy. Anyways, Opti, I want to get your thoughts, bro. Do you think parity with gold within 4 years, is it overly ambitious? Is it too bearish?
I don't want to be the bear on the show either, but 4 years does seem kind of quick, just personally. And I know what's the one meme, we overestimate what we can do in 2 years, but we underestimate what can happen in 10 years. And so 4 years seems pretty big. To clarify, Mauricio, gold is currently at like $22 trillion market cap.
Oh, damn.
Because
Okay.
it's been pumping. So, and everyone's saying if Bitcoin does hit the gold market cap, it'll be about 1.125 million per Bitcoin. So what's that? I don't know, like a 30x from here or something. That means Bitcoin's going to be doing something like the 2013 cycle. So 4 years seems pretty quick, but when you really kind of break it down, and actually I'm gonna start with the Howard Lutnick because it'll go into the Bitwise clip. So my more charitable take is very similar to what Mauricio was saying on Lutnick. It does seem like he's kind of saying, let's do this sly roundabout way. And if you listen to that clip, he basically saying like, hey, if you want to use Bitcoin and all the freedom aspects that we talk about it, this is probably the best way to frame it so that the people in power don't get freaked out. And as we know, he's part of the U.S. government. He's part of the Trump administration. So he can't really go out there and publicly be like, yeah, Bitcoin's better than the dollar. Obviously, that would be political suicide. So he's definitely not going to do that. But if he is kind of doubling down, and if you listen to that clip and he does kind of say all the other things that we've already talked about, it does seem like a more favorable way of framing what Bitcoin is. Obviously, we're seeing that a lot of people are framing it in the digital gold meme, and I'm going to put a pin on that because like my less favorable view on this is kind of going into the stablecoin talk, and we all know the stablecoin conversation has been going on. We're seeing a lot of politicians kind of push stablecoin talk here, and of course that is to continue like fiat dominance around the world. So that's my like less favorable take on that conversation. But connecting this to the digital gold meme, obviously, I've been saying it on the show for a while. I'm not the biggest fan of the digital gold meme because I do think Bitcoin is much more than just digital gold. And if, you know, we do use memes to kind of just use them as crutches so people can understand what's going on. And the people with capital right now, we all know, is the boomers. And so they can wrap their head around what gold is. And so when you connect that to digital gold, then it starts to click in their brains what is actually going on over here. Though I would say that that meme in itself is kind of like an iceberg. It's just the tip of the iceberg here, and it's much more than just digital gold. But the idea of Bitcoin going to gold market cap, or, you know, sat to gold parity here, whatever you want to frame it, I think, like Mauricio said, it is an inevitability. If Bitcoin continues to do what it does, we do know it will get there, and much, much more. We all know that one global capital chart, you know, $900 trillion of global capital. Maybe it's at what, 1,000 trillion? What's even past a trillion? Is it quadrillion? I don't know, big numbers. But we know that Bitcoin's going to go past the gold market cap at some point, whether that's in our lifetimes, whether that's in 10, 20 years, or for your great-great-grandchildren. Who knows when? But if Bitcoin continues to do what it says, or rather what it is doing, then we know that's where it's going to go. Bitcoin is going to accumulate a lot of the global capital once people start to understand it is the superior way to store value. Now, I am a Bitcoin is money kind of guy, or rather Bitcoin is an alternative to fiat currencies. But I'm okay with framing Bitcoin in a way where it kind of, you know, gets all the regulators off our back so that we can just kind of continue to do what we do, and the Trojan horse meme, etc. But when you listen to the Bitwise CEO, and he actually had another interesting clip the other day, and even BlackRock is kind of saying something very similar the last week, is that the amount of institutional interest in Bitcoin right now is insane. And I think we've all been kind of feeling this on the show and in the chat. It's like, with all this good news, with all these, you know, and I'll be a little less charitable, all this supposedly buying of Bitcoin from these big institutions, it's only a matter of time until Bitcoin rips. But we are seeing, and I know this is kind of the one of the conversations right now, is like, is the 4-year cycle dead? I'm still on the fence on this. Obviously, in hindsight, we'll be able to make that decision. But it does seem, with the amount of buying that we're seeing, the amount of interest coming from the big players in the world, the global big players, not just, you know, in Bitcoin, it does almost feel like the 4-year cycle might be on its way out. And if that is the case, then who knows how quickly this can run. Like, if people really do FOMO into Bitcoin with like Michael Saylor type buys, I think we underestimate how quickly Bitcoin can run. And then, of course, you know, retail following suit and the masses following suit. So, I mean, gold parity, or Bitcoin to gold parity right now in 4 years, it does seem overly bullish, but we don't know what's going to happen. We don't know what's in the future. It's going to get there. But in 4 years, I don't know. I've been saying 8 years. I've been saying 2 cycles from now is when we get there. I'm starting to feel PTSD with 100K predictions from last cycle. So I don't want to say $1 million Bitcoin this next 4 years.
I do want to give a shout out to the live stream. 1,300 of you guys. If you add Rumble, 1,400 of you guys watching live between YouTube, Rumble, and X. If you guys are enjoying the show so far, smash that like button. Help us break 100 likes within the first hour of the show. Appreciate the YouTube live stream. On the verge of breaking 400 live viewers. Smash that like button, guys. It really helps pushing us in the algos. Guys, we have a jam-packed show for you guys. We're going to be talking about Ledin. We're going to be talking about the lending market as a whole. I think this is something that people are just kind of not aware of how to utilize your Bitcoin. Michael Saylor has said it perfectly. Bitcoin is the most pristine collateral the world has ever seen. So we're going to be talking about that. And of course, we have an expert joining us on the show today, Mauricio in the house. And then we're going to be talking about El Salvador, some interesting things happening in El Salvador. The IMF is saying that El Salvador is not buying Bitcoin anymore. And then Stacy Herbert of, the Bitcoin office is basically saying, no, El Salvador continues to buy Bitcoin. They have a public address, so you don't have to take their word for it. That address continues to go up. They continue to stack. So what is going on there? We're going to be talking about it. And then we have Treasury Secretary Scott Bessent going out and saying, we have to make the IMF again. What does that mean? Like, a lot of this political stuff going on in the background is fascinating. Trump fighting with the Fed. We covered that on yesterday's show. Scott Bessent calling the IMF. We know how the Trump administration feels about the Bukele administration, right? They get along. So, I think there's some larger forces at play. We're going to be discussing all that. And then we're going to be doing a deep dive into Ledin during the news segment of the show. So it's going to be a jam-packed show. Tons of content. Smash the like button. Before we jump into it, I do want to give a shout out to Simply Bitcoin's lead sponsor, the best place to build your automatic self-custody Bitcoin stack, bitcoinwell.com. Guys, if you go to bitcoinwell.com, you go to bitcoinwell.com/simply, and just for signing up and stacking some sats, you get 3 opportunities to win up to 1 million Satoshis just for signing up. So go to bitcoinwell.com/simply today. What do I mean by this opportunity to win 1 million Satoshis? Well, it's all part of the Bitcoin Wishing Well contest. Every time you buy Bitcoin on Bitcoin Well, you earn Bitcoin Well points. And you could redeem those points for a Simply Bitcoin hoodie, for an orange Cybertruck, for a stamp seed. And again, you can also use them for the Wishing Well contest. Again, if you go to bitcoinwell.com/simply, you get 3 tosses into the Wishing Well, opportunity to win up to 1 million Satoshis. First person to scan the QR code today has won 621 sats. So go to bitcoinwell.com/simply today. All right, everybody, let's start the show. We have tons to get to. Let's check it out.
I want to tell you guys about our sponsor, Stamp Seed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stamp Seed's do-it-yourself kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not, allowing you to hodl your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on Stamp Seed. And you can use promo code SIMPLY to get 15% off anything on their store. Head over to stampseed.com today.
All right, everybody, we are back. You want to store your seed phrase the right way, the proper way. Stamp your seed into titanium. Don't write it down on paper. Don't do that. Don't put yourself in that position. Could you imagine that conversation with your grandchildren 30 years from now? And be like, Grandpapa, can I have my Bitcoin? No, I lost it because I wrote down my seed phrase on paper. No, get yourself a stamp seed. Go to stampseed.com today. Use promo code SIMPLY. 15% off. At the time of recording, the Bitcoin price is $94,880. Block height, 894,495. Sats per dollar, 1,054. Market cap, 1.88 trillion. Bitcoin versus gold market cap, 8.09%. Percentage issued, 94.56%. Decline from all-time high. If you buy Bitcoin right now, you're getting it at a 13.1% discount. Realized monetary inflation. My favorite stat here, because it continues to embarrass fiat currencies, is the inflation rate of Bitcoin is currently at 0.84%. And it's going to continue to go down forever. Anyways, we were talking to Mauricio before we went live, and I do want to give him a shout out. I mean, Forbes, bro. Forbes moving up, Mauricio, moving up in the world, man. This is crazy. You know how Simply gets on the cover of Forbes? We get banned. That's how we get on the cover of Forbes. You get on the cover of Forbes with the good news. So this is awesome. I just want to read the headline. I do want to talk about it. So Tether, Galaxy, and Ledin dominate centralized crypto lending as DeFi claims a bigger share of the $37 billion market. Let me read some of this and then I'll talk to you about it, Mauricio. It wasn't long ago that crypto lending looked like the industry's most radioactive ruin. And that's something to remember, guys. Remember, 2022 and 2023, the so-called great washout. You got, I don't want to name any names, but there's just the memes make themselves. You guys remember BlockFi, right? You guys remember BlockFi? Celsius, of course, you guys remember Celsius. I think the dude went to jail. Voyager, Genesis, right? All these lending platforms, like they just went under. They were doing some very shady things, right? Alex Mashinsky, I think the Celsius guy, right? Like he was straight up saying like, you shouldn't take self-custody at all, right? So it goes on to say, now a new report from Galaxy Digital suggests a partial resurrection is underway, led by a familiar cast of survivors. You're a survivor, Mauricio. Tether, Galaxy, and Ledin have emerged as the dominant players in centralized finance lending, holding a combined $9.9 billion in outstanding loans at the end of 2024. That's nearly 90% of the CeFi market, according to Galaxy's research associate, Zach I can't pronounce that. I'm sorry, Zach. Goes on to say, crypto lending exists for many of the same reasons as traditional borrowing. Traders borrow to short tokens or increase leverage. Long-term holders unlock liquidity without selling. Businesses take loans to fund operations, and lenders earn passive yields on idle assets. Today, the total crypto lending market stands at $36.5 billion, still 43% below its $64 billion peak in late 2021. But the composition of that market is shifting fast. DeFi platforms now account for 63% of crypto borrowing, nearly double their share during the last bull run. So, I mean, Mauricio, first of all, like, congratulations for surviving. I want to give you a shout out for surviving because I remember that, dude. That was an absolute massacre. Without naming any names, a lot of these people are my friends. You had a lot of predominant, people that were very influential in the space. They were promoting some platforms and other platforms. And then, unknowingly, because it wasn't their fault, right? They were promoting platforms that perhaps weren't doing, exactly what they should be doing behind the scenes. So my question to you is, first of all, like I said, congratulations, right? It's great to be, one of the three players that essentially, have the industry on lock. But what I will say, Mauricio, is, dude, how do you survive? Like, what did you do that BlockFi and Celsius didn't do?
Man, it's a simple answer, but it's an answer that, it's simple for me to say it because I'm in the weeds of this business and I understand it, inside and out. We've been living and breathing this thing since 2018. But the act of lending, like the activity of lending dollars backed by your Bitcoin, it's a very simple activity. All I really need to focus on is a simplified way. I need to keep your collateral safe. I need to give you the dollars. And when you pay me back, I give you back the Bitcoin. It's a very simple business where you start basically increasing risk and making the businesses a lot riskier than it needs to be is when you start accepting other things that shouldn't be treated as collateral as collateral for loans. So similar to Bitcoin, you start accepting things like basic attention token and all these other things that have no liquidity. And you put yourself in a situation where the market gets volatile and you're trying to exit that position. There's no buyer on the other side. So there's no way for you to make yourself whole back on the dollar. So number one is you started taking garbage as collateral that shouldn't have ever been taken as collateral. If you look at the companies that failed, I don't think a single one was Bitcoin only or Bitcoin focused. So the second one is they had tokens. and they had all this fancy financial engineering around their tokens. You know, I think Voyager had 2 tokens, Celsius had a token. You know, a plethora of other firms had tokens that went under, or either they had their own native token, or again, they were just, you know, taking large amounts of these other tokens as collateral, or to generate yield on those things. And there was just, you know, one, you're taking assets that shouldn't be treated as collateral. The second one is you're taking, you know, you have all these tokens and all these financial, it lets you play financial engineering shenanigans that you shouldn't be doing. Right. The other one is you had companies like in the case of BlockFi or others, even Celsius, that was taking open term dollar deposits that could be withdrawn at any time. And they were investing these dollars in mining projects that needed, you know, had 5 to 10 year paybacks. So when people showed up to get the dollars, you know, they had no dollars to give them back. So they had to go, you know, straight into insolvency. So there was a plethora of bad behaviors that led to what we have today. By the way, none of them had proof of reserves. Not a single one of the firms that went down had a proof of reserves protocol. Ledin has had proof of reserves since 2019. Actually, we just released our most recent one. And so I believe proof of reserves should be a standard in the lending industry. It will become one if things continue to go well. But that's one of the main things you need to look at is, do they have proof of reserves? The other one's, how long have they been around, right? But you know, to put it succinctly, these companies, you know, went wrong because they didn't keep their businesses simple, because they kept trying to go for that incremental percentage profit, for that incremental asset to boost their assets on platform. There was and to some extent, you know, you're seeing some glimpses of that today. You know, just the lending market is on a tear. You know, you can see it in our numbers. We just shared that we originated $304 million of Bitcoin-backed loans in Q1 this year. And so, of course, other firms are looking at this and they're saying, oh, we'll do it. You know, we'll try to do it for cheaper. We'll try to do it with a fancier app. We'll try to do it this way or that way. And we've seen this movie play out before, right? And so I think that for you as a consumer, as a Bitcoiner, the main thing you should be checking or diligencing from the other side when you're considering these products is, A, how long have they been around? What do other people have to say about this? Did they go through that volatility of 2022? How did they manage? Because if some companies that are coming out new and haven't been tested, you don't really have any way to know that they can or cannot navigate. So I would say that the firms that went south didn't go south because of what they were doing. They went south because of how they were doing it and all these shady practices that they had around the very basic and simple product that is Bitcoin-backed loans, right? So that's sort of where I would put it. And also always demand proof of reserves. Don't ask for it, demand proof of reserves.
And that's something that you guys do. You guys do proof of reserves. And then another thing that what you mentioned there, which I want to harp on, is these other platforms had tokens. You don't need a token to offer what you do. I think you described it perfectly, which is like, the business is simple, right? You know, you send me your Bitcoin, I hold it as collateral, I give you cash. When you pay back the cash, I give you back your Bitcoin, right? You don't need a token. But it was very lucrative to create a token for a lot of these companies, but look at how that ended up. And another thing which I love about you guys is you guys are a Bitcoin focused lending platform. I believe the last time you told me it was like 95% of the loans or something, maybe it's even higher than that, are Bitcoin.
I'm trying to contain my grin, but there's going to be many great announcements coming on this front. I will share today that 99% of our loans are Bitcoin. And that's gonna keep going higher. But I can't really tell you much more than that right now.
I wish I could speak say what's on me and Mauricio right now are talking through where I don't know, how do you, when you talk without saying words? Anyways, Opti, I know exactly what you're thinking, Mauricio, is what I'm trying to say. Opti, what are your thoughts on this, man? I mean, you were here, bro. We were making content. We were in the trenches. Simply Bitcoin was tiny. I think we had less than 10,000 subscribers on YouTube, bro. You remember those days, bro. BlockFi.
Yeah, I mean, BlockFi and even Celsius or FTX, they definitely put a big, ugly stain on the Bitcoin industry at large. And I think we're still kind of dealing with that. And this story that we just covered on Forbes is obviously, I think, as it said, signs of it increasing. But I do want to ask just Mauricio, us more pivoting it away from just the actual Forbes conversation, but what exactly was in the Galaxy report? And I think that might be helpful for the audience as well.
Yeah, definitely. So what the Galaxy report did is it basically, for the first time since the collapse of many of the other firms, Genesis used to put out what was considered to be the sort of top report around the industry, where they broke down their book month over month and or I think it was quarter over quarter. And then this was treated, by the industry at large as this sort of, the go-to report of how the lending industry was doing. Since they went down, no one had actually come out, and no one was really large enough to put out a report that was relevant enough to be treated as sort of an industry benchmark. So what Galaxy did is they went out to basically all the prominent players in the space, and they asked them to voluntarily share their data, which we did at Ledden, and kudos to the other companies that did so as well, in the spirit of transparency and building a reference point for the industry. And shout out to Alex Thorne, who was the guy that reached out to me and I was chatting with about, putting this stuff together. And so for the first time ever, what Galaxy did is it basically combined all of our data and created what is an aggregate view of the lending market. And it broke it down between, by lender and by type of lending. So there's decentralized finance and there's centralized finance. And so what you can take away, or what you can see from the report, is effectively what market share each lending type has within those different types of lending, what market shares do the different players in each one has. And it can sort of give you a glimpse on who's at what particular space, because obviously the rankings and the size of these firms have shifted. Before these companies collapsed, Ledden was a very small player relative to the guys, the likes of Genesis and the likes of BlockFi even, and Celsius, because again, their benchmark at the time was assets, size of the assets. And because these guys were adding all these random tokens left, right, and center, they would get, every time they added, for example, Chainlink, they would get a massive wave of Chainlink deposits, and it would balloon their assets on platform and make them look bigger and bigger and bigger every time. We didn't play that game. And so we were always looked as the slow, boring, Canadians, or the little guys back then. And I think Tour de Meester put a really great tweet when, referencing the report. And he says, what I love about this report is that it basically paints lending as the tortoise and the hare competition, right? Where at the beginning, the hare was doing great and they looked to be doing so much. And all of a sudden the hare just poof, just disappears. And here come the tortoises. And, if you look at the names, like the Forbes article said, these are a familiar cast of survivors. Galaxy, Ledden, and Tether have been around for years. We were around, a lot of us predate or are contemporaneous with the BlockFis and the Celsius and those the other companies that are now defunct. We just didn't play the game of trying to grab assets by supporting things that didn't make sense. And because of that, we were deemed as, the slow, boring people. But what this report shows is that the slow, the boring, the consistent, that's what wins the race, right? Like you won't win. This is a marathon. This isn't a sprint. And we're running this thing like a marathon. I want Ledden to outlive me and my kids, right? These other guys are probably worried about their next quarter bonus. And I think that's really, really important, because the values that you have, or you try to live to as a company, they get reflected in the things that you do, right? If somebody tells you they're in this for the long run, and all of a sudden they start adding all these things that don't make sense, but it does kind of give you a couple of headlines and grab some assets, don't look at what I say, look at what I do. And I keep saying that, I have full confidence that anyone that's trying to diligence Ledden and go back and see all the things that we've done over the years will find nothing but what I'm telling you now. We have never made a decision that will give us an incremental point on a quarter at the expense of risking the business. We've never done that. In fact, we were the guys that refinanced the Celsius loan clients out of bankruptcy. We took 68% of all the people that were trying to refinance their loans out of the Celsius bankruptcy came to let it. And the ones that didn't is because they were in jurisdictions that we couldn't yet service. And I've seen, by the way, a quick sidebar, I've seen a lot of questions here around California. I don't know if anybody saw the headline, but a few weeks back, we announced that we have introduced our application for California. So we are coming. I will keep you posted on when that is, but it is coming.
I love it. Love it. Yeah, man. I mean, look, the proof is in the work, right? The proof is in the work. You guys survived, and you guys obviously survived for a good reason. And you guys never launched, forgive my language, a shitcoin. You guys never launched a token. And I think, you know, that was a major contribution. You guys, you know, what people perceived to be, you know, this slow, boring company in Canada, you guys did it correctly. So when the price of Bitcoin started correcting and the house of cards started falling, right? You know, the people that did it correctly survived, right? And it's so crazy because I don't know if you guys were around for those days, but some of those platforms like Celsius and BlockFi, they were getting so much attention. They were getting so much attention. And, you know, now it's essentially, you know, now it's they're, you know, some were like the guy was.
Are they even still around?
Dude, they're in
They're
jail,
not.
bro. They're not even around, but they're in jail.
So quick note, Mashinsky's sentencing is May 8th. So for those interested, a lot of our clients are former Celsius impacted clients. So I know they're interested in this. So the sentencing will happen on May 8th. And yeah, I mean, it was thinking back to those days, it was a very frustrating time to be in the space because, or to be in the lending space, because we had people saying to us, you know, how come a firm like BlockFi or a firm like Celsius can offer me loans at such low interest rate and you guys can't? And we would say, you know, we had two choices at that time. We could have turned around and said, okay, guys, we need to do whatever it takes to go match these rates so that we can compete with these guys. Or we could say, hell no, we have no idea how they're doing this. You better go ask them, but we're certainly not going to go play that game. That was tough because I was on the withdrawal calls with a lot of my clients that were either closing loans and taking them to BlockFi or Celsius because they were giving them out for cheaper than we were, or taking out, you know, USDC to go put it out, or Tether to go put it out on all these firms because they were paying higher yield on the dollar. So like, how could a firm be paying more for the dollars and charging less for the loans at the same time? And I would try to convey this to them on the call, and I would say, and they said, how come they can do it and you can't? And my answer to them was, I live and breathe this thing. I don't think there's a single person out there that works harder than us. They might work as hard, but they won't work harder than us. And our job here is to find the cheapest and safest way to make these things get to you. And I have no interest in going through any type of bankruptcy process or adding any undue risk to the business. So I can tell you very clearly where my yield comes from, where my dollars come from, and why I have to charge you the rate that I have to charge you. And I can point to the things, and I can point to the rate that I pay on my dollars, and I can point to the rate that I charge on my loans. How, like, you're looking at a company that is paying 12% on dollars and lending you those dollars at 1%. How? Ask them. You ask them how they're doing it. I can't tell you how they're doing it. I can tell you how I'm doing it. And this is how my math works. These are my goalposts. This is how the business works. I will explain to you how I make money and how we can make these products come to life. How can they do it on those terms if they're playing by the same rules that I am? And, you know, the sad answer is that most people didn't ask the question. They just saw the big logos, the big sponsorships, the big names. They were shaking hands with people in all the conferences and doing all these keynotes. And they felt warm and fuzzy, and they took all their most precious asset, and at times their life savings, to some people that ended up being, you know, dishonest. And you know, for us, it was you know, we had to say go. You know, we had to say, you know, we will process your withdrawal, we'll close your loan, go take it there, but please ask them how they're making this happen and understand the risks that you're taking by doing this. I don't charge you the rate I charge. Man, when people ask us, why are your interest rates lower? Do you think there's anything else that I do other than waking up and think to myself, how can I make my rates go lower? Like, do you actually think that I'm sitting there thinking, oh, I'm going to hose everybody that's coming to take a loan? Like, that could not be further from the truth. We fight tooth and nail to give people the best rates possible. If somebody's out there giving you a lower rate, most often than not, it carries a lot more risk. Can you get a cheaper loan than Ledin? Somewhere? Yes, I'm sure you can get a cheaper loan than Ledin. Will it be as safe? Will it be, will you have the same assurances? Will you have proof of reserves? Will you have all the things that you should care for? Probably not. So we're not here to build the sort of highest volume loan for the quarter. We're here to build something that can be here in 2022, 2025, 2035, 2045. And this is the way we believe we can build it.
Yeah, absolutely. 100%. I mean, and again, I think the proof is in the pudding in terms of that was really ugly what happened, right? And you guys are around, you guys did it right. You guys didn't launch a shitcoin. And you guys obviously made the right moves, and that's obviously what got you here. Guys, we're going to talk more about Ledin during the news segment. But before, we're going to hit the culture segment, and we're going to be talking about El Salvador, the IMF. They seem to be going back and forth. Quite interesting. We're going to get Mauricio's thoughts. And if we have time, we have a quick update for you guys. Samurai Wallet case update. Again, the reason this is so important, and a lot of this stuff has been walked back by the Trump administration, is the previous administration was essentially trying to set the precedent that they could sanction open source software. And the reason we brought that up, we're like, look, you know what else is open source software? Bitcoin, right? So, they kind of did this slow creep of sanctioning Tornado Cash. I believe that got reversed. And then when a bunch of, I think it was Coin Center sued, they lost the case. As soon as they lost, like a week after, the Samurai guys were in jail, and, Samurai was essentially sanctioned too. So anyways, we're going to be talking about all this. We're going to be hitting more questions on Ledin. But first, let's hit the culture segment. We will be right back. I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledin has been the trusted choice for Bitcoin-backed lending, with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledin is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially, what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledin.io today. All right, everybody, we are back. All right, let's get to this. This is kind of weird. This is kind of funky. I want to get Mauricio's thoughts on this. So kind of give a little bit of a context, right? So I believe there's politics playing in real time. I think we're witnessing. So essentially, for anyone who hasn't been paying attention, part of the conditions that the IMF gave to El Salvador for this loan was essentially that they had to remove Bitcoin as legal tender. But depending on how you look at it, it didn't really change, because it was like, yes, Bitcoin isn't legal tender in El Salvador, but you could still use it as a currency. And there's no capital gains tax implications when you use Bitcoin as its currency. So essentially, they didn't want the title. Now, connect that with what Howard Lutnick was saying in the beginning in terms of focusing on commodity, not money, not money, not money. I think the IMF really, really wanted to emphasize the fact that Bitcoin is not money. It's not money. That's what they really focused on. But the thing that was happening simultaneously was that Nayib Bukele on Twitter literally kept smash buying Bitcoin to the point that like Elon Musk was in the comments. Nayib Bukele was dropping memes of just like, yeah, we're just going to keep buying Bitcoin. And I think it got to the point that it embarrassed the IMF. And I think the IMF had no choice but to essentially say, you know what? Part of this condition is that El Salvador, you can't buy Bitcoin. Now, what's really interesting, when that announcement was made, Nayib Bukele, who's normally extremely active on Twitter, on X, went radio silent for 24 hours. His next post was exactly referencing that El Salvador was going to continue buying Bitcoin. And I remember when that happened, I actually posted this and I was like, look, they're at a crossroads right now. They essentially get to decide that they are their own sovereign country with a democratically elected leader, and they have the right to do what they want with their money, or they want a foreign institution that is headquartered in Washington, D.C. to get to dictate what they can and cannot do with their money, regardless of democracy, right? So that's the context I'm providing. Now, a little bit of an update on this saga, and I find it quite interesting because we're essentially with social media, you see politics in 4K right in front of you. You get front row access to this. Let's check out this dude from the IMF. I believe this is Opti's uncle, if my memory serves me correctly. Uncle Opti, or Opti Senior. Let's check it out.
In terms of El Salvador, let me say that I can confirm that they continue to comply with their commitment of non-accumulation of Bitcoin by the overall fiscal sector, which is the performance criteria that we have.
So I will say, Opti, your uncle's kind of a dick, but just kidding. That was a joke. That was a bad joke. Very rude. No, but it's weird because they're sending us like I don't understand what's happening, right? So this official from the IMF, who's not actually Opti's uncle, he's a very respectable gentleman, and he's basically saying, hey, you know what? Like, El Salvador is complying with this. Here's Lena Tiche. She spent a lot of time in El Salvador, and she's close to the president.
She lives there now.
She lives there. She says, it seems many people didn't catch the sly wording by the IMF here. He doesn't say El Salvador stopped buying Bitcoin. He says, quote, they continue to comply with their commitment of non-accumulation. Why does he talk about compliance with a commitment? Because there's no order from the IMF for El Salvador to stop buying Bitcoin today. He's talking about a future benchmark that isn't even due. In other words, El Salvador is complying because nobody is asking El Salvador to stop stacking. Don't fall for the IMF wording. They're trying very hard to make you think they're winning against Bitcoin. Now, here's Stacey Herbert. And she says, El Salvador continues building a perfect staircase leading to prosperity, opportunity, and new capital markets for the country. Actions speak louder than words. Guys, the beauty of Bitcoin. Oh, by the way, breaking news. I believe Strategy released a mempool a dashboard as well.
Yeah.
Could they be going public with that? Would be effing massive, right? But again, that's speculative. Why would they brand it? I don't know. Anyways, we'll wait and see if that news does break. But El Salvador keeps stacking, right? And obviously Lena knows, right? And again, you know, it's one thing what they're saying, but if you actually pay attention to what El Salvador is doing, it seems like they continue to stack Bitcoin, right? It seems like it. right? I mean, the address is public. So are they just moving Bitcoin from one address to another? I mean, like, anyhow, the president said they're stacking more Bitcoin. Now, this whole thing is quite interesting because if what Lena is saying is true, it means that they're absolutely effing terrified. And if you connect the dots with what Howard Lutnick was saying in the beginning in terms of continuing to reemphasize that Bitcoin is a commodity, the IMF seemed extremely concerned that Bitcoin was legal tender. They were very concerned about that. Remember, and if you look at El Salvador from like an economic perspective, the country has a $32 billion GDP. Elon Musk's net worth is like $250 billion. Just to give you guys a perspective, this is a very small economy in Central America. Why do they care so effing much what this tiny little country wants to do? And I remember there was so much momentum after Nayib Bukele made his announcement at Bitcoin 2021 here in Miami. I was like, there's going to be more countries that follow in the footsteps of Nayib Bukele, make Bitcoin legal tender. But all of a sudden, it was very strange. It's almost as if the momentum stopped. And I couldn't figure it out. But then when this news started to drop, I was like, wait a second. The IMF has dealings with like half the countries in the world. Do you think any of those countries are going to want to look at Bitcoin? No. It's like IMF policy for them explicitly not to look at Bitcoin. So, you know, this is quite interesting. And then this leads me to this next part, which is Treasury Secretary Scott Bessent. So we know how he feels about Bitcoin. He calls it gold, very bullish. Overall, the Trump administration is full of Bitcoiners or pro-Bitcoin people. You have RFK Jr., Tulsi Gabbard spoke at the Bitcoin conference. Like you have Howard Lutnick, who's speaking at the Bitcoin conference this year in Vegas. And you have David Sachs, the White House crypto AI czar. So, you know, if the IMF is messing with their bags, like obviously that doesn't make him happy. So let's check out what Scott Bessent had to say.
First, we must make the IMF again. The IMF's mission is to promote international monetary cooperation, facilitate the balanced growth of international trade, encourage economic growth, and discourage harmful policies like competitive exchange rate depreciation. These are crucially important functions to support the U.S. and global economies. Instead, the IMF has suffered from mission creep. The IMF was once unwavering in its mission of promoting global monetary cooperation and financial stability. Now it devotes disproportionate time and resources to work on climate change, gender, and social issues. These issues are not the IMF mission. And the IMF's focus in these areas is crowding out its work on critical macroeconomic issues. The IMF must be a brutal truth teller and not just to some members. Today, the IMF has been whistling past the graveyard. Its 2024 external sector report was entitled Imbalances Receding. This Pollyannish outlook is symptomatic of an institution more dedicated to preserving the status quo than answering the hard questions.
So, I mean, that last part, you put the politics aside, we're not really a political show. I mean, Bitcoin, I don't know. We're not a political show in that sense, right? But that last part, I do want to play it again, right? Because it's very powerful, what he just said.
The status quo than answering the hard question. Dedicated to preserving the status quo than answering the hard question.
The IMF is more dedicated to preserving the status quo than answering the hard questions. And you could see how this applies, right? It's I'm not just seeing things. Like you could see how this applies to this, right? And what is the status quo, right? What is the status quo? Because they spend a ridiculous amount of energy. And by the way, oh man, I think what we found out in the last 5 years is like a lot of the media isn't. They're not accurate sometimes. And I think that we kind of found that out in the last couple of years. And what really like caught my eye as someone who makes content and is in the media business is how much attention they gave El Salvador. Remember, El Salvador didn't exist before it made Bitcoin legal tender. As soon as they made Bitcoin legal tender, it's like Satan spawned out of the ground, and all of the media just focused on this small country that survived this crazy civil war, and for the first time they have relative security, and they just went crazy. And I was like, okay, why are they so hell-bent? Like, why are they and my honest conclusion is I think it had to do with Bitcoin. Like, honestly, I think it has everything to do with Bitcoin. So, I showed you guys a picture of the two first pro-Bitcoin presidents outside the White House, Nayib Bukele, President Trump. Again, I don't think a lot of these things are coincidences. I don't think you don't really have to read too much into what he's saying, right? They're more interested in preserving the status quo than answering the hard questions. Like, my question to them is, why are they telling a sovereign country what they can and cannot do with their money? It's a pretty simple question. Mauricio, you have any thoughts on that?
A few. So I guess just to sort of, to share my point of view on a few of the things that you've mentioned. Okay, the IMF, you can look at it as a political organization, whatever you want to look at it. To me, I look at the IMF as a bank for countries. Okay, so when countries need money, they go to the IMF for a loan, or they go into the bond market. Like, there's three ways for a country to raise money. One, you try to create your own bonds, you raise the money from your own economy, which sucks because you draw cash from your own economy and you kind of take it away from it. And the second one is, you'll do that in your local currency. So if you have your local currency, you will issue the bonds in that local currency to your local people. Second one is you can try to sell them to international crowd. The international crowd most often wants a US dollar denominated debt, and they can be a lot more demanding. And the third option, which is the one that most countries tap into when they find themselves challenged to raise domestically or from the international bond markets, is you show up at the IMF and you say, "Hey, Mr. IMF, I need a loan." Right? And very similar to banks, when you go to banks and you ask for a loan, they'll ask you, well, okay, well, what's your income? What are your expenses? What's your credit card debt? What's your car lease? And then eventually you say, well, I need $1 million. They might come back to you and say, oh, you have too much credit card debt. Oh, you're spending too much money on this, or, oh, you're spending too much money on that. And therefore, it breaks our model. We cannot give you this loan, right? So like a bank, the IMF says, well, I'm going to fork you these, $2 billion, whatever the amount is. What are you going to do with it? And how are you going to pay me back? Right. And most often, if you're in the shoes of the IMF, again, I'm not trying to defend the IMF by any means, but if you showed up, or if any country showed up to the IMF and they said, hey, I need some money, and then you said, okay, what are you going to go do with it? And then you tell the IMF, well, I'm just going to go buy Bitcoin with it. They'll say, well, that's not really why we're here. We're here to kind of help you develop things in a certain way that can make you compatible for global trade and, basically, make you a net positive to the world. And perhaps what they're saying is, we don't see Bitcoin as something that's going to help others because we don't think everyone has Bitcoin. Such that when you buy it, it helps everybody. We think that when you're buying the Bitcoin and you're hoarding it and you're not using that money to sort of develop other things in your economy to boost trade or exports, it's not really the type of investment we want to make as a bank, right? So when people go to the IMF, they borrow money from the IMF. So when Bukele at times is spending money, it is spending the IMF's money in some ways. Like, some of that money for that budget is coming from the debt financing he got from the IMF. So in the same way that banks can tell you, I don't like that you have this much debt, I don't like that your lease is this big, therefore we can't approve this amount for you. The IMF is basically trying to do its same thing. So it's strings attached money, right? It's not no strings attached money. And so that to me is now the other thing I will say is that Nayib Bukele understands this incredibly well. And Nayib Bukele is a brilliant politician. Don't forget, it was not too long ago when he was announcing Bitcoin's legal tender, and then he announced the volcano bonds. Okay, the volcano bonds were his sort of response to, oh, you're not gonna get me money, or I'm not gonna be able to source money through IMF. No problem. I'm gonna go source them through these volcano bonds. And the volcano bonds never went through, but he did actually issue traditional bonds from El Salvador, which, by the way, have done phenomenally well. And for those investors who bought it at the emission, and what he did after the fact is basically it's pretty much like the art of the deal. Like you see a lot of this in politics, where Nicolás Maduro, the Venezuelan tyrant, used to do this oftentimes. So ahead of an election, he would create was some ridiculous threat. For example, I don't know if you recall him threatening to invade Guyana, right, and to have like a sort of incursion into Guyana. And people went up in arms and thought, oh my God, this is crazy. And this was leading up to the election. And then right before the election, he says, you know what, we're just going to stay out of Guyana. And then everybody thought he was a moderate guy and came back and he obviously stole the election anyway. But what I'm trying to say is that this idea that you create the problem, you bring it here, and then you say, well, if you to get the money, you have to tone it down this much. But at the end of the day, it's a win. Bukele kept Bitcoin as an option for people in El Salvador to use, to stack, to hold, to spend. And he got the money from the IMF, which made his bonds do even better. And now he can kind of keep this flywheel going of his own bonds to get to a point where you don't need the IMF money. And once you do so, you kind of break the chains from the IMF, and you'll be able to, continue. But you will get there faster if you're able to play ball with them, get the financing, bridge you, and then grow faster because of it, right? And so I think there's a lot of things at play, but I think the IMF is what the IMF is, and Bukele, understanding the rules of the game, was able to move his chess pieces in such way where he got this cake and he gets to eat it too.
I mean, beautiful. What a beautiful summary, man. And just kind of breakdown of just the politics involved. And again, it's interesting. And yes, it is the art of the deal, right? It's just aiming further than your mark, right? And then, what seems as you're settling is actually what your goal was. But before, you just aim so ridiculously high that, yeah.
It's a huge win. I was in El Salvador for the Plan B conference when the news of the legal tender broke. And I remember thinking to myself, he got the loan. Like I wasn't thinking at all about, IMF, legal tender, this, legal tender, that. My question was, and I was in El Salvador talking to people, and I said, hey, what's changing for you? They're like, nothing, absolutely nothing. I can still spend my Bitcoin. I can still spend dollars. Nothing's changed for me other than this guy just got a massive loan. And that massive loan is going to be used to power beautiful projects in El Salvador, which can be tourism projects. Like all of us, or not all of us, a lot of us are going down there. El Salvador needs more hotel infrastructure. Is that a Bitcoin investment? No. Can you use some of the IMF money to further the investments of El Salvador tourism and then by proxy increase the Bitcoin activity in your country? Hell yes, right? How is he able to continue buying that Bitcoin, or at least show that Bitcoin? I'm very curious, or I'm very interested in the language. Nowhere in the language that I've seen on these posts have I seen El Salvador is buying Bitcoin. This Bitcoin belongs to the government of El Salvador. Everything continues to build a staircase, continues to create a fund for prosperity, fund for this, fund for that. There are many things that you can do in the background to comply with certain things. And I think Bukele is a master at this. And he's walking a fine line between challenging the IMF, but also working with them. And I think he's winning.
Yeah, I think he's absolutely winning. And I think, it's the success of I was just there like a week ago. The success, again, that part of the world genuinely is not that safe. It's just not that safe. And I think what he's been able to do from a safety perspective, and the amount of free advertising, right, that he got with the big, like, it was ridiculous. And the tourism that the country got, right? I mean, you have a Central American leader and they're rolling out the red carpet in the White House, right? Like, it's the real deal. So, you know, very good. And again, this is a country, it was Opti who told me this, I think. It was like, this is a country that has a $32 billion GDP. So this is a very, very small country, and it's having it has an extremely big impact for just the general size of the economy. So I think he's done a great job, and that was a great breakdown by Mauricio.
I want to add one last thing, because I think some people miss this when they talk about El Salvador. What Nayib Bukele has done to turn El Salvador into the most violent and dangerous country in the world to now a place where Americans can walk around old San Salvador with their iPhones out taking photos is doing exponentially more for the people of El Salvador, to the average person of El Salvador, than Bitcoin legal tender. And I know that we tend to grade Bukele on what he's doing for Bitcoin as that's the benchmark. I think that rightfully so, coming from a person who grew up in a place where you couldn't be out past a certain time, you couldn't cross a certain street, had friends, robbed, kidnapped, etc. My wife was kidnapped. What he's done for that country from a security perspective dwarfs what he's done for them from a Bitcoin perspective. And if you haven't been down there, I welcome you to go down and walk down El Salvador and snap your iPhone photos, and try to go do that in Honduras, or try to go do that in Guatemala. And then tell me what you think is more meaningful.
Absolutely. 100%. I completely agree. Again, if you've spent time in the region, you've lived in the region, you know exactly what Mauricio is talking about. You generally have to, look over your shoulder. You can't pull out your phone. Like, that is a really bad idea, right? And in El Salvador, you can. I genuinely feel safe, right? And you don't get those vibes. You will feel it. Like, this is something that I can't describe. Like, you'll go and you'll understand, like, something is sketchy. Your body will tell you this, right? Instinctively. So anyways, guys, we're gonna move on.
Nico, I know we're running long. I do want to say one thing about the Scott Bessent IMF stuff and this going on. Not to rehash what Mauricio said or Nico said, my main takeaway from this is I just love that the IMF is getting called out from the highest positions of power. And, and I think all of us here at Simply Bitcoin in the chat, we've constantly stressing the importance of reading, the Economic Hitman, and you'll understand why this is very important. So I'll just leave it at that, because we are running long today.
All right, everybody, let's move on to the next segment. We're going to talk about all things let-in. We will be right back. I want to give a shout out to our sponsor, Casa. Casa makes self-custody easy and secure. As a Bitcoiner, I care about holding my own private keys, but multi-sig can sometimes get tricky. Casa nails it with a multi-key security. So even if one key gets lost or stolen, your Bitcoin stays safe. And you don't give up custody, meaning no one could access your Bitcoin but you. No seed phrase anxiety, no single point of failure. I've been telling my friends and family about Casa for years. Their UX and UI on their app is by far the best in the industry. Inheritance planning is built in, and they even offer Casa for Business if you're thinking about a Bitcoin treasury. Hit up casa.io today and use promo code SIMPLY to get 10% off Casa Standard or Casa Premium. Head over to casa.io.
I want to give a shout out to our partner, CoinKite. If you take your Bitcoin security seriously, you'll need the best Bitcoin hardware wallet on the market to take self-custody. That's where Cold Card comes in. The Cold Card Q is the most advanced Bitcoin signing device ever made. It's got a full keyboard, larger screen, and NFC support, making air gap signing easier than ever. It's built for power users who want the ultimate security without sacrificing usability. And if you're looking for a battle-tested, uncompromising cold storage, the Cold Card MK4 is your go-to with PSBT signing, an industrial-grade secure element, and USB-C. It's the perfect blend of security and convenience. Both devices are, of course, 100% Bitcoin only, open source, and built by Bitcoiners for Bitcoiners. Secure your Bitcoin the right way with the Cold Card Q and the MK4. Head over to coldcard.com today and use promo code SIMPLY to get 5% off anything on the store.
All right, everybody, we are back. This is Opti. And if you use promo code SIMPLY, you'll get 5% off, not Opti, but the Cold Card Q. This is the best Bitcoin hardware wallet on the market. It makes it incredibly easy to take self-custody of your Bitcoin. Guys, get yourself a Cold Card Q or an MK4. Highly recommend it. Scan the QR code on your screen. You get 5% off anything on the store. Anyhow, thank you, Opti. I do want to address this comment. And by the way, appreciate it, bro. Thank you for the 5 great British pounds. And the comment was divided this by 21 million. I do want to give a shout out to the live stream too. 2,089 people watching live right now. If you guys are enjoying the show, we're on the verge of breaking 200 likes on YouTube. Smash that like button if you guys are enjoying the content. And again, we're joined here by Mauricio. Mauricio is the co-founder of Ledin. I saw a comment and I want to nip it in the butt because this is what we do here on Simply Bitcoin. Where is it? Where is it? Here it is. I found it. Hard Hodl says, hey, I know we talk self-sovereignty, but Ledin wants your Bitcoin and we promote them because they give us money as a sponsor. Oh, and I also have a loan with them. So Nico, okay. All right. So let's talk about this. So okay. Number one, I'm a business owner. And number two, I'm a Bitcoiner, right? So obviously as a Bitcoiner, the goal should be to have more Bitcoin than the day before. You don't want to sell your Bitcoin. Now Bitcoin has become a stable coin, but 2 years ago, Bitcoin wasn't a stable coin. Bitcoin used to go up. And you don't want to sell your Bitcoin. So what we do on this show, all the sponsors that we have, all the partners that we have, they're actual products that we use that have helped us in our Bitcoin journey. Like, for example, Casa. It's what I recommend to my parents and my grandparents because I don't trust them taking self-custody. I'll be honest with you. Ledin is a great tool if you essentially, you don't want to sell your Bitcoin, but you want to unlock some of the liquidity in your Bitcoin. So without having to sell it. Now, does that come with trade-offs? Of course. You have to be responsible because, again, Bitcoin's very volatile. If Bitcoin drops 50%, do you have enough to essentially cover because they're going to ask you for more collateral, right? Like you can get yourself into pickle, but if you're responsible with it, it's a great tool that you can use to essentially get cash without it being a taxable event and either use that cash to be a degen and buy more Bitcoin. I don't recommend that. Or use that cash to essentially fund your business, which is what I've done here at Simply, right? So yes, I mean, I'm all for it. Like, and yes, they are a partner, but yes, I actually use the product. And yes, I actually use the product for, you can use it for whatever you want, but I use it for funding my business without having to sell my Bitcoin. So yeah, I mean, it's a great tool. Now, I agree with the people that, they come from this kind of like purist standpoint, which is like, all right, man, I'm going to have my Bitcoin, have it in self-custody. There's nothing like self-custody. That's 100% true. Like there is nothing that replaces self-custody. But at the same time, there are realities of number one, living, of number two, having a business in Bitcoin, and number three, like it sucks to sell your Bitcoin. It really does. And I would have a lot more Bitcoin today if I didn't sell it like here and there. Because at the time when Bitcoin was $3,500 or $1,000, you're like, sell a couple, why not? And you think about that now, and you're like, holy F, I'm a effing moron. Why did I do that? Right? So you kind of learn by like burning your fingers on the metaphorical stove, and you're like, okay. So essentially, again, Ledin is a tool, and you can use that tool responsibly to help your business or to help your purchases. Let's say your wife is like, hey, listen, I'm tired of living in a 1-bedroom shack, and we've been hodling for 15 years, and I think it's time to upgrade. I've had Bitcoiners, and Mauricio, I'm sure some of your clients fit into this category. They're effing OGs. Okay, they don't need, they got so much Bitcoin, they don't need, they can just sell, a quarter of it, buy a man. No. They're like, F no, I'm not going to sell it. I'm going to take a loan against it so I can keep my Bitcoin. And the beautiful part about Bitcoin too is that before it became a stable coin, it tended to go up, right? So over time, the cash that you owe, obviously there's an interest rate. Bitcoin's, before it became a stable coin, Bitcoin's annual appreciation rate tended to be bigger than the interest rate of the loan. And you guys offer a refinancing feature as well. So, as the Fed lowers rates, you guys you can essentially refinance the loan. So, Mauricio, that's my take. That's my response to the comment. It's best to nip things in the butt. But could you talk about this, man? Because I think people don't I think some of your biggest clients, and this is a hunch, right? I think some of your biggest clients are OGs that are trying to upgrade their lifestyle. They're like, yo, I'm not going to sell my stack. F that, dude. I have 1,000 Bitcoin. I'm not going to sell my stack, right? So
you're absolutely right. And again, for the privacy of our clients, we're obviously never going to name names, but most people that you probably look at on a screen, a lot of them are our clients. And I remember this one distinctly because in this particular case, and this guy is not a content maker, but in this particular case, there was one of our clients who had loads of Bitcoin, and he wanted to buy a house. Very much the case that you're laying out right now with his wife. I think they were having a second baby. They needed a bigger space. So he came to us and he said, I want to buy this house. Would you be able to give me, I think, a couple $1 million worth of a loan back then to buy the house if I can't get it from the bank? And I said, of course, go to the bank, try to buy it with their money, because if they can give it to you at a lower interest rate, why would you need me? Try to get it from them. So he goes to the bank, and the bank says, show me your income. And the guy has many Bitcoins. He's basically retired. And so in his tax income, whatever, and the money that he makes when he gets paid, he had very little money. He wasn't getting paid very much because most of his money was in assets, rightfully so. So the bank says, no, we're not going to give you any money to buy the house, because a loan, many people think a mortgage is a loan based on the value of the house. It's not. A mortgage is a loan based on your income backed by the house. But if you don't have the Bitcoin, or if you don't have the income, you're never getting the house, no matter how much cash you have on hand. And so at this time, we had a pretty open discussion, and he said, this is what I'm going to do. I'm going to take out a loan from you guys to buy the house. And then once I own the house, certainly the bank will give me some extra cash based on that asset. And then I'll partially repay the loan. And I said, no problem. You take the money at Lenin, you can repay the loan at any time, no penalty, fractionally, fully, whatever you want. And so I said, no problem, go do it. So he takes a loan with us, goes and buys the house. And then he goes to the bank again and says, okay, now I own the house. Can you give me some cash at a lower interest rate so I can go pay down the Lenin loan? And the bank says, still no, because again, we don't care about that asset. We care about your income. And so the reality of many Bitcoiners is that if you do want to live on a Bitcoin standard, if you do want to have most of your money in Bitcoin and minimize every aspect of your fiat life, you will not have access to these fiat products that many of us are used to, like loans, credit cards, things of that nature. So Bitcoiners, and the reason we started Lenin was when I started mining Bitcoin back in 2015, we were building our mine. Obviously, we got paid in Bitcoin. We had fiat expenses. We wanted to grow the mine and reinvest. But the only way to do so was to sell the Bitcoin, to buy the equipment, and then wait for it to make more Bitcoin and potentially, hopefully, buy back the same Bitcoin. Not once was I able to buy back the same amount of Bitcoin. Not once. Every time I sold it, and I got enough money to buy it back, it was much higher. So I never had the same amount of Bitcoin. I was always getting left behind. What I wanted was somebody that said, hey, that's an asset. I'll lend you some dollars against it. And when you pay me back, and by the way, keep the upside. I don't really care about the Bitcoin itself, as long as it doesn't go down. You know, I have a collateral that I can sell. Every single person back in 2016, 2017 laughed us out of the room. They said, Bitcoin's not an asset. Why would you not just sell it? And you know, it was at the beginning, it was discouraging, but later we realized these guys were just asleep at the wheel. And if we got this right, we were going to be one of the primary ways, or you know, I believe the primary way you can access financing without selling your Bitcoin. And that's what we set out to do. And still to this day, if you show up to a bank and you tell them that you've been living on the fiat standard for the last 5 years, please give me a credit card, they'll tell you get lost. Mm-hmm. Now, the other thing that is very special about Bitcoin is that I believe, and I have to check the stats because I'm not freshened up on them right now, but Bitcoin makes, you know, for example, if Bitcoin moves 40% up in a year, that 40% increase usually happens in 4 days, 5 days. So you have to be in the market for those 4 days, for those 5 days. It basically, Bitcoin operates in like a step function, right? And so the key to this is that you always need to be in the market. If you're trying to come in and out and time the market so that you can buy more, you're getting wrecked, man. And you're never going to get the same amount of Bitcoin back. That's not the game that we're in. We're not traders. We like holding on to things and let time and inflation do its thing. So for me, I think, again, done responsibly. If you look at the chart, every person that's used our loans responsibly since we've been operating in 2018 has made money, in the sense that has created wealth by not having sold their Bitcoin. Mm-hmm. The interest is well, I'll give you an example. In 2024, our clients made about 8 times more money in the appreciation of their collateral asset than the interest that they paid us. And as more financing comes into the space and competes to fund our loans, our interest rates will go down. And as our interest rates will go down, the things you can do with these loans will become more and more and more, because the hurdle rate of what you have to make to cover the cost, aside from the appreciation of the Bitcoin, it just gets easier when you're getting charged a lower percentage. Whatever it is that you're doing has to generate less to cover the cost, right? And again, forget about the upside of the collateral asset. So collateralized lending has been happening since before coin money existed. Like in a couple of reference points here. Before coin money existed, people were lending each other seeds backed by goats and goats backed by gold. Like, lending is a natural human interaction. And the first set of human rules, the Hammurabi Code, has a section to deal with interest rates. So I don't believe, are going to get rid of loans either on a Bitcoin standard or on a buy Bitcoin fiat standard or any type of standard, because lending is just part of commerce. So for us, we saw Bitcoin as a way of solving a lot of the problems with collateralized lending today, which is, how can I verify where my collateral is being held? Like, how much easier is it to look at a proof of reserves report or an asset address on a chain versus going and checking somebody's vault and seeing if the gold has something in it, or having to melt the whole thing? So Bitcoin solves so many problems that have plagued fiat lending even. And we think it's just the natural evolution of an activity that we've been doing for thousands of years. And so, again, people's views on certain things are also tainted by their own life's experiences, right? Like, maybe they were jaded by a lender. I know people that have just gotten screwed over by BlockFi and Celsius have probably a different opinion on lending that those that never did. And by the way, that did a huge damage to the industry, because it was a bad apple, and now people got an idea on their heads about apples in general, right? And so I think, again, lending is not going to go away. Our approach is that we want to do it in the most responsible way, in the most sort of enduring way that this can be done. Because if we do that right, then Bitcoin will do its thing, and our clients will make money. And if our clients make money, we'll make money. So that's really what we're here for.
100%, man. And I'm seeing some questions in the chat. What's the minimum loan? The minimum loan is $500. I know you guys take a lot of pride in that because you guys want to be inclusive in terms of, because you guys have to understand, right? Like most of the world is not playing with $10,000 or $20,000 or $30,000, right? And that's just something to keep in mind. It seems like, yeah, look, someone had a bad experience with BlockFi in the chat. Yeah, guys, definitely recommend Ledin. Use them myself. I think you guys get a discount on the loans too if you guys use the code.
You use the link, right? You see this one?
We're getting in trouble for people not using people going like, "Hey, Mauricio,
I'm gonna be like Opti. I'm gonna be like Opti, like this, But no, use the code. You get a 25 bip discount on the loans.
Yeah. Don't just go directly and say Simply Bitcoin sent you because it gets us in trouble, man. Use the link. All right, everybody. I hope you guys enjoyed today's show. If you did, smash the like button. Consider subscribing. I'm your host, Nikos. My legendary co-host, Optimus Fields. And again, the co-founder of Ledin in the house, Mauricio. Thank you so much for joining us. Guys, we love you all. And we'll see you tomorrow on the next one.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.